Felix here. There are 5 stocks that I'm buying right now. At least 2 or 3 of them you've probably never ever heard of. And I'll explain to you why I'm looking at them. I'll give you the rationale from a fundamentalist point of view and then also from a chart point of view, because both things really matter. And if you just go and check down below what the tickers are and then just go and buy them, you will lose money. Why? Because unless you actually have an exit rule, unless you actually know when you're going to buy it, first of all, I'm not always buying them at today's share price. And secondly, if you don't know when you're going to sell it, either for a small loss or for a big profit, well, you're very likely going to make some sort of silly emotional decision like we've all done in the past. And we end up with bags that we're holding, things that are down 20, 30, 40, 50, 70%. And if you've got a bag that you're harboring in the basement of your portfolio, let me know down below in the comments. Let us know what it is, and we'll maybe make a video on what to do with those. But let's jump straight into it. I want to give you the value here as quickly as possible. And of course, if you want to actually understand how to make those selections, like, it's always nice to say, oh, if you don't know the rules, then you're screwed. But I actually give you the rules. So this, I think, to level the playing field here. How do you get access to the rules of when we buy, what we buy, and when we sell, and how we fully automate that at felixprehn.org/get-free, which is a short 15-minute mini masterclass which teaches you everything that I've learned from the good guys on Wall Street. There are some good guys. Not that many, but there's some. So stock number 1 is a gold stock. Gold, really? Exciting stuff, right? And you could, of course, go and buy a gold bar and then get your golden retriever to dig you a nice hole and then put it in there and then wonder where it is when you are trying to find it again. He's probably eaten it, at least if he's anything like mine. But what we could also do is buy individual gold stocks. I'm kind of a fan of that approach because say you're a gold mine and you're sitting on all this gold, literally, it's in your mountain, and the gold price goes up. Well, the whole value of that goes up. The stock market then puts a multiple on your future earnings, and potentially your stock goes up more than the gold price. So for me, it makes a lot of sense to buy gold stocks rather than gold ETFs. I do actually like physical gold, but there's a limit to how much you're going to want to harbor, right? So the first thing is here, and this is what I look at from a fundamentalist point of view, and there are literally 2 things to this. One is that little purple line here, which is called basically cash. So this is basically cash. How much cash are they actually generating? And then the blue line is what? Well, the blue line is the ROI, return on investment. And all I really care about, and I'm not going to spend hours on this, is are they going up? And yes, they're both going up. Ka-ching. So then we look at the stock chart, which actually tells us the same story because the stock's going up. Now, the stock wouldn't be going up if those numbers weren't going up. At least it's very rarely the case. So some of you are going to be screaming, Felix, it's too late. You should have told me about this one sooner. You were holding it back. You're pumping this up. There's always one. There's always one. 99.9% of our comments are lovely, but there's always one. Now, one kind of gets to me. It's just like FFS, just learn. All right. So what are we doing with this? Well, this is a very, very bullish setup. We can connect sort of crudely the highs, and you sort of get into this kind of a pattern, or you could maybe just do the last 3. It's a little neater. And you sort of see that we are on that, very, very nice zigzaggedy upward trend. And I'm literally buying here. If you wanted to be a bit more cautious, you could say, well, it does zag every time it goes up, doesn't it? And yeah, it does. You could buy a little bit more on the pullback and hope it does the same thing again, which is a reasonable thing to do. And the line I would watch out for is a bigly yellow line that you see here. What is that bigly yellow line? Anybody know? Put it down below in the comments. 1, 2, 3. It is the 50-day moving average line. Congratulations. You won a cookie. How do you access the 50-day moving average line? You go to Trade Vision, which is the software that we built to give you access to the best data out there. And you click on here, down here, SMA, simple moving average, and you select the 50. So we were kind of wanting to see those bounces off the 50 again and again. And that's very, very important that keeps happening. So you could also wait for the next bounce and then buy here, rather than on the way down, which might be a little bit safer. But generally speaking, this is just a very bullish setup. I'm very bullish on gold for the sort of medium term, and therefore I keep nibbling at gold week after week after week after week. Now, the next stock is a Gold stock. Why 2? Well, I like to spread out a little bit. And again, I'm not telling you to buy these stocks, but I try to buy maybe 3, 4, 5 different gold stocks and spread myself out. Again, a bit of risk management, but in the same sector tends to help. And what are we seeing here? Well, return on investments going up, and leveraged cash flow generation is also going up. Not as brilliant as the numbers at NGD, but heading very much in the right direction. So what does this stock look like? It looks like this. It's a SSR Mining Inc. And that looks pretty good too, doesn't it? So where is the buy point here? Well, again, you will spot, and you will see me draw these squiggly lines to the end of time, because that's actually how we make money. You see this sort of sideways thing, right? So what do we then do? Well, we take a line and we connect at least the last 2 highs, and then we look for where we actually break out of it. So can we see where we break out of it? We break out of it here, right? We closed above it. That was 2 days ago. So again, someone's going to show, Felix only shows me these stocks once it's over and once he's already bought it. Good God. Well, the difference here is that for me, the entry system was here at 1173. We're right now trading 0.95% higher as I'm recording this. And if the stock price is moved by the time you watch it, that is also the marvel of the stock market. The prices do move. But what I'm saying is I wanted to always exceed the previous closing prices, which were ear and ear. And still can't say ear probably. I spent 10 days in France. It's stuck. So that was for me that, but yeah, it doesn't make a huge difference whether it's there. And then undoubtedly, and this is again where people get this wrong because they don't actually understand the system. So learn the rules, my friend, learn the rules. It's undoubtedly going to do something like that again, because that's how the market actually works. It does it again and again. And what do we call this? Second chance. You know, you don't always get those in life, but with the stocks, you always do get your second chance, almost always. So for me, yeah, it is a buy here. You could wait for the pullback if you wanted to, but I am buying here. Doesn't mean you should. Now, stock numero 3. This is probably one that you've heard of before. See what I did there? Heard of? Spotify. Yes, I'm feeling very silly this morning. So it's sort of a consumer staple to me because I have a Spotify account. I actually really don't like it, because I miss the days when you could play a full album in its full glory and it would just play that and then it would stop and you'd make a decision to play something else. Whereas now you play something on Spotify and then it sort of continues playing whatever the heck it wants. And I don't really enjoy that, but that's just, you know, welcome to the new brave world. Anyway, it is a brilliant business. I'm not going to cancel it because I like music. So I'm playing it, even though, yes, it isn't perfect. Very few people are going to cancel it. And you can see from their numbers, their return on investment is brilliant, and their cash flow generation is also getting better and better and better and better every single quarter. So it's a brilliant business. It's like a Netflix of music, essentially. And the stock chart, well, bada bing, it is doing the same sort of thing. It just keeps going up and up and up and up and up, basically. Not on a straight line for obvious reasons, but it is in a very nice, tight sort of consolidation phase here, right? That phase there, which is also the previous high pretty much. And we like those. We look for those. So what do we look for? We look for where do we break out above this zone. So I'm going to move this line up a little bit, and I'm looking for the, let me show you, I'm looking for the fat bits of the green candles, because the fat bits of the green candles, can you still say that in a you know, time of Ozempic? They'll all be really thin soon. And with kidney disease, the fat bits of the green candles are the real closing highs. So I want to be above those. That would be at $665.50. If you wanted to be a little bit more conservative even than me, not politically conservative, just conservative, no Nazi salutes are required, then you would go to basically 670. So I think 670 would probably be the sort of, this is definitely moving up. It's moving out of that zone. So that's the way I would look at that. So yes, I already have some of this because we nibbled on this again a little sooner, but it hasn't really moved at all, as you can see, and that's a good thing. The longer something like this moves sideways, the bigger the typical breakout that follows. So I like Spotify here. I don't actually like Spotify, but I like the stock. And that's one of those things that, again, I think we need to understand. Like, don't let politics or a CEO or whatever really get in the way of making money, right? Maybe there's some ethical rules which we should have, like, say, a company that encourages children to take tobacco products or smoke, or advertises intentionally, or makes sweets that it places at the right height so that a child can pick them up and they're actually addictive. I mean, maybe that's where you draw the line, but not me, because we're of course talking about Philip Morris, one of the least ethical businesses in the world, but also one of the most brilliant. And I've actually given you 3 lines here because it's that good a business. We got gross profit margin in here too, which is just absolutely phenomenally marvelous. They had a bit of a boohoo on profits, but that seems to be recovering here quite nicely, which should also help the cash flow to improve again. And this is literally a company that sells addictive stuff to anybody who wants it, and has lobbied every government in the world to make tobacco advertising illegal. So their core tobacco business has no competition. It'll exist until the last smoker dies of lung cancer. And in the meantime, they're making everybody addicted to those little sweet things, or those funny vaping things that, you know, are basically non-burnable tobacco products. And they're horrible for your health. Don't vape, puff, whatever, chew any of the stuff that Philip Morris turns out, because it's going to kill you. At least that's my humble opinion. I'm sure the lawyers at Philip Morris would disagree with me on that. Opinions are apparently still permitted. But scientifically, I'm sure the marvelous people at Philip Morris who are out there saving one young child at a time from the painful life of having to live without addiction, those glorious people, I'm sure, have scientifically backed things that say that all their products are marvelous for your health, just like they used to say tobacco was good for you. So what's the marvelous story with this one then? It's, well, as we're getting a little sidetracked here, it is just a brilliant company. It's just a marvelous money machine with, if you leave your morals at the door. And well, last week really I was really looking at these highs here. Like, that was sort of the 179 high, and I was like, well, if it cracks 180, then we're back in business. And the week before that, it was 175. So for me now, it is basically 179. We're close at 180, so it's sort of 180. So yeah, to me, it's just a very, very bullish setup. Is it a little extended? Perhaps. Is it possible that it might do a little pullback like that on us? Well, it is possible, but I would expect it to be caught by the 50-day moving average line. As long as it keeps doing that, be very, very happy. So waiting for a little bit of a pullback could be the right thing to do. But I just think it's just such a brilliant business. I just think these guys are going to keep making money and money and money and money in the most ethical way possible. I think we got ourselves out of the hole there, right? Have we got another one? Yes. Oh, yes. Crypto. Why? Well, $2.9 billion flew into crypto last week, according to the knuckleheads at Bank of America. And they're probably right. So you could buy a crypto ETF like iBit or something like that, something calm and creative and sort of, just a classic ETF. You could, of course, buy Coinbase or any other ETF out there. You could buy the DJT, the Trump media is buying Coinbase. That didn't work out so well so far. GameStop is buying Coinbase. That didn't work out so well either. But the one company that I'm looking at, and I've actually bought some of, is called MetaPlanet. And this is going to be sort of a GameStop type company for most. Therefore, high risk. Yes, you have been warned. This is crypto leveraged through a Japanese company that used to run restaurants. Sounds like a brilliant idea, doesn't it? I mean, you really can't make this up, right? If you want entertainment, don't watch Netflix, watch the stock market. It's just brilliant. So I'm looking at a weekly chart here. Why am I looking at a weekly chart? Because it tells us quite a story. And I do that sometimes. And last week, not the last week, the week before the last, we went as high as $16. And then we closed the week down here at sort of $7. This week, we went as high as $9 and are presently trading at $7.25. So it is something that goes up and then comes down fairly hard. Now, therefore, this is the sort of thing where I don't just buy it at whatever price it is. I'd like to buy it on a pullback. Now, when it was trading up here in the sort of 14 or whatever it was, I set an entry price which was at 780, I think. I think it was here. That's where Felix bought. Doesn't mean you should. And that seemed like a reasonable place to be because it was the low of these days. And I was like, well, I want to get on the low because if I'm not in it, I don't really care. I've sort of gotten over the FOMO thing, also the appeasing people and trying to be liked thing. I got over that one too. Helps a lot, to be honest. And there's always some loon in the comments somewhere. And if you care about everybody's opinions, then, well, you'll permanently be upset. So we kind of gave up on that one. So if you were one of the loons, go nuts in the comments. It'll actually put a smile on my face. It does now. There's always somebody who says, should have told me sooner. It's too late. You're always wrong. And I lost money on your last pick. And I'm like, well, I'm up 50% on it or something. Like, it's a question of timing, which you can learn the skills. FelixPrehn.org/get free, and you'll actually learn the skills. So yeah, this one's at 725 now. So, what would be a reasonable entry point? Well, you really got to come to that conclusion yourself. It might drop lower. It might drop back to the lows of below 7. Maybe it'll revisit the $6 lows. All of that's possible. The whole thing, of course, is essentially hanging on the thread of BTC USD, which has taken a little bit of a tumble, and therefore the things that are sort of built on top of it will take a tumble. But what is the point of MetaPlanet? There are a couple of things to it, really. One is it's Japanese, and we just like Japanese things, just a bit more elegant and polite, and that's not really the reason for it. Japan has 55% capital gains taxes on crypto. So this is the only method in which they can buy crypto, Bitcoin that is, while avoiding those capital gains taxes. And it's essentially a copy of MSTR. So people who buy Bitcoin, so basically you sell shares, collect cash, buy Bitcoin with it, then you might do some funky derivative trades with it, but ultimately that's essentially what you do. So you're sort of a Bitcoin treasury type business, and that's it, really. That's really all there is to it. And then you have to actually fundamentally be bullish on Bitcoin, which you may or may not be. But that's the way I see it. So why am I bullish on Bitcoin? I just think it's at this point of mass adoption. And just if everybody in the world ends up owning 1% of their portfolio in Bitcoin, then, it'll probably be $1 million. There's no actual calculation behind what I just said, but it'll be higher, probably. Likely. So if you got some value out of these 5 little picks, imagine if you could actually pick stocks yourself with utter confidence, and you knew when to buy it and when to sell it. And having a stop loss on every single position, to me, is the most important thing in the world. So I'd highly recommend it if you want to learn exactly how we do that. Head over to FelixPrehn.org/get free, and my hope is that it'll help you get free. And I know tens of thousands of you have watched it and said that it has. So check it out, FelixPrehn.org/get free, and I wish you all the best.
You have donut?
This stock is one of those rare opportunities where we can potentially 10x, 20x, maybe even 30x. And what is it? Well, it's pitched as the next micro strategy.